Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And after a 1,000-point drop on Thursday, the Dow, the S&P 500, and NASDAQ all finished the week lower, with choppy trading on Friday that ultimately ended lower at the end of the session. As we usually do on a Friday, we'll start with the S&P 500 chart. As you can see, currently has a chart analysis score negative 90, indicating that overall we are in a long-term downtrend. And we're taking a look on a weekly level, and it finished down 0.2% at 4,123.34, marking its fifth straight weeks of declines. Key level to watch would be 4,512.94. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the S&P 500. The major safe haven of this move lower has been the dollar, not gold, not precious metals as it usually is. Currently trading at 103.68, hit a high today of 104.06 with a chart analysis score of plus 100, indicating that we're in a long-term uptrend for the US dollar. And as you can see, that's 5 straight weeks of gains for the US dollar. Key level to watch, it's just below $100 at 99.81. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the dollar index. Dow Jones, a wide range, traded as high as 34,117 earlier in the week, as low as 32,449.87 yesterday at its lows when it lost over 1,000 points. Currently trading, closed trading at 32,899.37, down a little over 0.2% on the week, with a chart analysis score negative 90, indicating that we're in a long-term downtrend. As you can see, that marks at 6 straight weeks of losses. Moving along to the NASDAQ, closed trading at 12,144.66 with a chart analysis score negative 100, indicating that we're in a strong long-term downtrend for the NASDAQ. And its weekly level to watch will be 13,710.70. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the NASDAQ. Take a look at gold, falling, which is surprising in this market. You'd think that people would be flying to theirs as a safe haven, but that has not been the case. Currently trading at 1,882.20, down about 0.7, almost 0.8% on the week, with a chart analysis score plus 55, indicating that we're in a sidelines range for gold. Key level to watch would be 1,865. A move below that level would give us a red daily trade triangle, indicating a move to a short-term downtrend for gold. Crude oil continuing to trade higher, up 110.45 a barrel today, with a chart analysis score of plus 90, indicating overall we're in a long-term uptrend for crude oil, and we currently are up 6.04% on the week. Key level to watch would be 107.24. Move below that level would issue a red daily trade triangle, indicating a move back to a short-term sidelines position for crude oil. But overall, that long-term uptrend is in place. Take a look at it here. We'll back out. Take a look at Bitcoin, as crypto is under pressure like the overall stock market is. Currently down 4.7% on the week, trading at 36,021.99 with a chart analysis score negative 100, indicating that overall we are still in a long-term downtrend for Bitcoin. Key level to watch would be 42,978.95. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for Bitcoin. And real quick, we'll just take a quick peek at a daily chart here. And 34,000 looks to be the line in the sand as we'll turn on our trend line here. And as you can see, if we draw it like right here across the bottom, it has tried to, since beginning of the year, it broke down here early in January. It actually hit a low at 32,950, but it bounced back, tried again to break through this level right here in February, so almost a month later from January. Then continued up, and we're getting right back to that level again. So we'll have to see if the $34,000 level holds, or will Bitcoin break below it and head lower from there. We'll have to see what pans out next week. With that, every success. Have a great weekend, and we'll be back next week with a market update.